So I was just heading to our members club to do this talk on why markets crash. And then the idea came that I'm sure you're busy and you probably don't have an hour to listen to this thing. So here's a short, quick version of why markets crash and why they just crashed. No, I'm not just going to harp on about the Japanese yen carry trade. It's a lot more than that. We're going to talk about it, but here he goes. I remember when I was in uni and 2008 happened, and I was completely lost as to why it happened. Because around me, nothing was going on, but they were saying the world melted down, a lot of people lost money. So that took me down a journey of how money is created. And once you go down that rabbit hole, you realize money is just debt. And it's debt that somebody types into an account somewhere. And most people think central banks print all the money. Actually, they only print a few percentage points worth of money. It's your local banks and the bigger banks themselves that print money when they give out loans. Okay? Now that's the first step. That's how what we call money, bills, are created. But in reality, the vast majority of money is actually today sitting in what's called derivatives, which are fugazi financial products made up, and they derive their value from really valuable things like commodities, or in this case stocks, and sometimes bonds. So it's debt and assets that are used to create these derivatives. So in that journey, I had to look at, okay, what is all the money in the world? And try this. Go into Google and type in all the money in the world chart and look at the 2022 edition. I'm going to show it in the longer talk, so if you want to see it, make sure you watch that. And then you realize, oh my God, the vast majority of money isn't money. It isn't even assets. It's these derivatives, right? So then I started to think about money in the way that it's named, which is liquidity, okay? The vast majority of money or value is actually liquidity is sitting in the form of derivatives that are backed by the debt. So the debt is the next biggest ocean out there, and the debt is hooked up to the stock and equity oceans, which is hooked up to the crypto puddle on the beach. So if you've been with me for some time, you've probably heard me say this. Plus, I got to go in 10 minutes, so I'm rushing through this. Money is printed by banks. The most amount of liquidity is sitting in debt markets and derivative markets. So most people who earn money are actually never going to get wealthy, because that money is actually debt, and the debt is being inflated faster than people can earn it. Wealth is in assets, okay? So we work for money, and the wealthy actually use assets to make money while they sleep, okay? So now the currency markets are debt. Governments issue debt, central banks issue debt, and then the currency gets printed. So that's what's happened with this recent market crash. So in simple terms, when governments and central banks print money and issue debt, the markets go up. And when they stop that process, the markets crash. So what's happened now? The Japanese bank was printing a lot of money, creating a ton of debt, very, very cheap. People were borrowing that debt and investing it into the stock market and tech stocks, and were making a lot more money. The Japanese bank, central bank, decided to stop that money printing process, stop the debt printing process momentarily. Everybody freaked out, started selling their stocks, and that's the unwind of the yen carry trade. Now, that's just one piece. Then there's a whole bunch of other currency kind of devaluation events going on globally, which we're going to now start to see play out in a significant way. Then even beyond that, there's the junk debt markets, where corporations have issued a ton of debt, which has inflated the amount of liquidity in the world. When that unwinds, we're going to have even bigger issues. Then there's the commercial real estate debt that banks are holding. When that unwinds, look out below. Then there's the derivative debt, which is the most amount of debt ever. It's like $1 quadrillion of debt backed by $600 trillion of real assets. When that unwinds, that's when the great taking will play out. And if you haven't heard me say this, go to thegreattaking.com. Please take a look for yourself. Do your own research. Try to prove it wrong. If you find some data, send it to me. Now, Wall Street knows all of these things very intimately because they are the ones who made it. When I say Wall Street, I mean Wall Street, London, the bankers have all made all of this stuff. Most of us don't know these things. So what's the solution to all of this? The first solution in my eyes is understanding that assets follow liquidity. And if you want to learn more about that, go and watch Everything Code by Raoul Pal. It's the best explanation of why assets follow liquidity, which means assets go up when money gets printed and assets go down when money is not being printed. The second thing to understand is you need to start looking at the ISM to understand where the business cycle is, because this goes in waves. Money printing slows down, business cycle goes down, money printing goes up, business cycle goes up, and the business cycle and assets are all tied together. You can go onto TradingView and look at the ISM, and then look at it in correlation with Bitcoin, and then you'll really start to understand that the game is all tied back to the liquidity in the oceans flowing up and flowing down, going up and going down, flowing out and flowing in, so on and so forth. Then there's a lot of forward-looking data we can look at. Like, for example, this monetary inflation, this money printing is happening at an average rate of 8% per year. Inflation is between 2 to 4% per year, depending on who you ask. That means you have a 10 to 12% hurdle rate. You have to make 10 to 12% on your assets just to break even. The stock market averages around 10%, which means the stock market basically hangs on to your money and doesn't make you rich. Most people think the stock market makes you rich. The stock market makes you numbers on a screen, but those numbers on a screen are just keeping up with the inflation. Bitcoin has gone up millions of percent, so it has outperformed this money printing. Tech stocks have gone up hundreds of percent, which means they've outperformed this money printing. Now, if you look at the forward-looking data, which I'm going to show in the talk, so again, if you got an hour, it'll be the best hour you spend. Money printing is going to go parabolic starting in 2025. So 2025 to 2026, we're expecting insane amounts of money to be printed from the forward-looking provable data. So what we're doing is buying the right assets, right? For me, digital assets make the most amount of sense because when you look at the great taking thesis, anything that isn't self-custodied is probably going to be taken. And if you're like, no, Sim, that's not how the world works, ask the Russians. If you don't have Russian friends, that says a lot about you. I'm just kidding about that. If you don't have Russian friends, that's whatever. But ask the Russians, okay? The Russians had everything stolen from them. And the same thing could happen to people who don't self-custody their assets. With digital assets, we self-custody them directly. Buying solid digital assets, for me, makes the most amount of sense. And then another thing to do is understand the shift to a digital reality. Right? We're going from this physical world to a digital world. It looks really scary. Most people are resistant to it. If you lean into it and understand this shift, it's the greatest opportunity in history, right? That's basically where we transition our wealth from this dollar-denominated paper wealth, numbers on a screen, dollars on a screen world to digital assets, which is still numbers on a screen, but it's actually assets, which go up as the money gets printed. And understand that blockchain is not built for humans to use. Blockchain is built for the future, which will have mostly AI and robots to use. And I know that's probably a scary thought, but welcome to the real world. Okay, that's where we're headed. Crypto is money for robots. So either get comfy with it or not, but it's gonna happen. Okay, and we are investing in this new internet. This is the next stage of the internet where we can own pieces of the internet. So that way of doing it shifts into the world where the world is headed, and investing is buying things with projections on where the world is headed. So action steps, I would say have your own mental model of the economy. If I just said a bunch of stuff and you're like, what is this guy on about? Trust me, that was me back in uni, thinking I had no idea as to how the financial world works and the technical world works. So please have your own mental model of how the world works and invest accordingly. Follow along with the changes. And that's what we're here to do, to help explain this stuff in simple terms and sometimes confuse the shit out of you, which I probably did to you right now. And that's part of the journey too. But follow along with the changes and digest as much as you can. And then have your own investment thesis. have an understanding of why you're buying the things you're buying, because it makes sense to you in your own mental model, and you can see why you're going to buy the things that you're going to buy. And then once you understand all that, transition your wealth from this old world to this new world, from this physical world to the digital world. And I'll be honest, if this seems crazy and this is like wild, this is all normal. It just hasn't happened in our lifetime. When cars came out, people who lived in the horse world were like, oh my God, this is crazy technology. When the internet came out, pre-internet people were like, oh my God, this is crazy technology. When the printing press came out, the people before that were like, this is bananas technology. It's all the same. It's just historical cycles playing out. It is perfectly normal, and it's happened many times in history. We just have the same characters with different clothes on and different technology. And I'll close off with saying that these are the kind of conversations we should be having to be able to understand where the world is going. And if you're in Bali anytime and you'd like to join, every 2 weeks we go have these conversations in person. If you drink over some cocktails, otherwise have some dinner, and we get to hang out and go through exactly this. But I gotta go do exactly that. If you like more, please join that conversation. Otherwise, don't subscribe. Just do these things I literally just said. Okay? Much love.